Ever wondered how many types of stocks there are? At its core, a stock is like a slice of a company's pie. When you own a stock, you own a piece of that company, giving you a claim on its assets and earnings. And just like a pie can be cut into different shapes and sizes, stocks come in various types too. This lets you choose the slice that suits your taste. Intriguing, isn't it? Now let's delve into the various types of stocks available in the market. First up, stocks can be classified based on the size of the company. This size is measured by market capitalization, which is the total market value of a company's outstanding shares of stock. Now, let's break this down into three categories: large cap, mid cap, and small cap stocks. Large cap stocks refer to shares from companies with a market capitalization of $10 billion or more. These are typically well-established companies with a history of performance. Think giant corporations that have a significant presence in the global market. Then we have mid-cap stocks. These are shares from medium-sized companies, those with a market capitalization between $2 billion and $10 billion. These companies are often in the growth phase, showing potential for expansion. Lastly, we have small-cap stocks. These are shares from smaller companies that have a market capitalization of less than $2 billion. These companies might be new or niche with a high growth potential but also high risk. So depending on the size of the company, stocks can be large cap, mid cap, or small cap. Another way to classify stocks is based on whether they pay dividends. Let's dive into what that means. Dividend stocks come from companies that have a practice of sharing a part of their earnings with their shareholders. This sharing of profits is done in the form of dividends. These dividends can provide a steady income stream, making dividend stocks a popular choice for income-focused investors. Companies that pay dividends are typically well-established with a track record of generating profits. On the flip side, we have non-dividend stocks. These are shares from companies that choose to reinvest their earnings back into the business. This reinvestment could be for research and development, expansion, or paying off debt. Companies that don't pay dividends are often younger or growth-oriented firms. They believe that reinvesting profits will lead to larger gains in the future. Therefore, depending on whether a company distributes its earnings to shareholders, stocks can be dividend or non-dividend. So we've discovered that stocks can be classified in various ways. To recap, we discussed large cap, mid cap, and small cap stocks, which are categorized based on the size of the company. We also explored dividend and non-dividend stocks. Dividend stocks provide regular payouts, while non-dividend stocks are more about capital appreciation. Understanding the different types of stocks can help you make informed investment decisions. Remember, knowledge is power in the stock market game.